Rideshare earnings in focus with both Uber and Lyft reporting. Uber is falling after reporting a surprise loss in the quarter, including a $721 million loss related to the company's revaluation of equity investments. Meanwhile, Lyft seeing gross bookings jump 21% from the prior year. Its active riders growing at the fastest pace since 2022. Here with more, we have John Blackledge, TD Cowen senior analyst. John, thanks so much for being here. Talk to me about the bifurcation that we're seeing here. Is this an indication to you that consumers are getting kind of tired of Uber's pricing and they're switching over to Lyft, or is it a different story?
Yeah, I don't think so. Let's unpack it here. We'll start with the Uber. On the 1Q results, so the gross bookings were up about 20% year over year. That was slightly below our forecast as mobility gross bookings and trips were impacted by lower than expected LATAM results, but EBITDA beat solidly 5% above consensus. And then the 2Q guide was fairly solid. Gross bookings on a constant currency basis up almost 21%. EBITDA guide was kind of in line with consensus at the midpoint. I think the shares are down right now for two reasons. Number one, lower 1Q mobility gross bookings, and then the 2Q guide was solid on a constant currency basis, but lower on a reported basis as Uber's facing higher FX headwinds than we thought, particularly on the mobility side. Overall, I think the trends remain strong for Uber, right? 15% user growth. They had 6% trip frequency growth that drove overall trip growth up 21% year over year. And then on the mobility side, the user growth was 17%, so it was above total company user growth, and they expect that to continue into 2Q and the rest of the year. But again, yeah, so I think just the lower mobility in 1Q and the guide was a touch light. On Lyft, they had a really good quarter, right? They like you mentioned, they beat on gross bookings, revenue was better, EBITDA also better. 2Q guide on gross bookings and EBITDA were above us, so we raised our price target. And they also have an event coming up. They have their first Analyst Day in New York City on June 6th, so that was also something that I think people will probably be somewhat positive kind of going into that. As they're going to lay out, we think they're going to lay out like intermediate term targets.
John, I want to talk to you first just about Uber and more specifically the stock reaction that we're seeing. We've got shares down nearly 8%. Given what you had just laid out there a moment ago, is then this selling that we're seeing today a bit overdone?
I think it will ultimately be overdone. But I kind of understand it. It's been a great stock over the last year. So expectations are fairly high. And so with a little bit of a miss at 1Q and as I mentioned, the 2Q guide on a reported basis a little bit softer, you get this kind of reaction. But like I said, the core just underpinning fundamentals of the business remain strong. And so I do believe it's a bit of an overreaction.
Well, John, I know that both Lyft and Uber were asked about the potential risk to ride-sharing companies that autonomous vehicles pose, particularly given some competition from Tesla, of course. Both CEOs sounded pretty optimistic, though, so let's listen in.
I get excited about autonomous cars because I think, great, it's going to be another way for people to get around. You can sort of think of it as another car that we could, run into our network.
If you're an AV fleet owner or you are an individual owner of a car, whether that's a Tesla or another kind of car, you're just going to make more money and make a higher kind of return on your investment if you plug in your AVs into the Uber ecosystem and into Uber demand. So, we think we bring a lot to the table. We're looking to partner with the AV industry.
So, John, is it that easy that this can just be a partnership?
Yeah, they both kind of mentioned the partner approach. And like, if you think about it for Uber, right, they have the huge customer base. They have the matching and routing technology for both companies. Big customer bases, matching and routing, the payment systems, regulatory expertise, and that can drive higher utilization for AV partners over time. And I think Dara mentioned also he thought AV could expand mobility marketplace with lower pricing, which would spur higher adoption. And Uber in particular has the partnership with Waymo in Phoenix. They are expanding AV partnerships on the Eat side as well. I think just the reality, in my view, as it relates to AV, is that the headline risk probably won't match the time it's going to take. to fully scale the technology. And as it scales, Uber will be the most scaled partner globally on mobility for potential AV partners, and then a leading one, potential partner in delivery. And Lyft will certainly be able to partner in the US and Canada. Those are the two markets that Lyft operates in.
John, can you give us a better idea of what exactly that timeline looks like?
Well, yeah, I mean, your guess is probably as good as mine. I mean, the companies haven't really said. I mean, I think if you listen to Dara today, he said it's going to take time, and even Lyft last night, it's going to take many years to be fully scaled. I mean, just for example, I think Waymo's operational in 3 markets with Austin coming. That's 3 markets in the U.S., and so it's going to take many years, and I think that's kind of how they were talking about it. And that's why I said, like, we're going to see these headlines, but actually when it is fully scaled, it's going to be probably many years.
All right. TD Cowen's John Blackledge, thanks so much for joining us here this morning.